GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we bring crypto insights with the same killer instinct as Michael Jordan. I'm your host, Jay Hamilton. It's Tuesday, February 18th, and today we are joined by Eric Balchunas, senior ETF analyst at Bloomberg, author of two books, The Institutional ETF Toolbox and The Bogle Effect. Eagles fan still grinning from ear to ear after the parade in Philadelphia. Today, we are going to talk about everyone's wondering when the Bitcoin strategic reserve is going to come. I mean, if it's going to come. Well, what if Elon through Doge could make it happen soon? We're going to explore a little bit of an interesting prediction there. Litecoin, Solana, Doge. Which of these is going to get an ETF first? When are they coming? And what might flows look like? We're going to talk about the ETF situation and predictions from Eric. And then also we're going to chat about Eric's book, The Bogle Effect, where he talks about legendary investor Jack Bogle. If you don't know who Jack Bogle is, we're going to get from Eric why he spent 2 years writing a book about this guy. Lots to learn. Before we jump in, guys, tomorrow we are going live with the Bitwise boys. That's Matt Hogan and Ryan Masmussen here on YouTube. So subscribe, hit the bell so you get notified. That's at 12:05 p.m. Eastern. Join us so you can ask your questions to them. Today's episode is brought to you by Bybit. You guys need to check out their new Trade GPT. It's an AI-powered assistant that makes token analysis really simple. Today's episode is also brought to you by Crypto.com, my favorite crypto card, no annual fees, a whole bunch of perks, lounge access, and so much more. Check it out. Without further ado, Eric, welcome to the Milk Roadshow.
Hey, great to be here. Thank you.
Very, very happy to have you, my man. It's an honor to be able to get some time sitting down with one of the great ETF analysts in the space. Let's just start before we jump into ETFs. I'm going to bring up a tweet that you commented on the other day of somebody predicting how the Bitcoin strategic reserve actually could happen rather quickly here. Let me just break this down. So basically, Elon's been asking everybody like, hey, what should I look into? And everybody's giving their opinions on Twitter. And Zero Hedge said, hey, somebody should look into Fort Knox and count the gold and see if all the gold's there. He's saying that the last time somebody looked was actually 50 years ago. I don't know if you can confirm that or not, but here's what he's predicting could happen. Okay, so if Elon pushes Trump to look and do an audit of Fort Knox, the audit reveals that there's actually less gold than there should be. So the calculation is wrong. Then Trump realizes that China and Russia have way more gold than the US, but very little Bitcoin. Then Trump issues an executive order for the strategic Bitcoin reserve, citing national security. The money printer goes burr, and the US buys as much Bitcoin as the market will sell. The price of gold collapses in Bitcoin terms. China and Russia realize that Trump got the jump on them, and they start trying to acquire Bitcoin. The price of gold collapses further. And then for good measure, Peter Schiff is admitted to a mental hospital. What is the likelihood? Like, is this actually possible?
So first of all, I just was fascinated by this because of the specificity. I mean, there's so many specific things in this. I come from the traditional sell side, space, and like no one talks like this, and it's just interesting to me. Even a little humor at the end, and I also find it very crypto that it's not here's what could happen. He's like, here's what's going to happen, and he lays out like it's like this thing that might have like a 1-2% chance. He's like so confident, so specific. And I just thought it was funny. So I just asked people what percent chance they thought it could happen. And mostly a lot of people from my TradFi followers were like 0, ridiculous. But some of the crypto people thought it was possible. I think some thought 1 through 4 more likely. A lot of people thought 9 was going to happen regardless.
That's Peter Schiff going to the mental hospital for everybody
it was one of
else.
those chances for a little fun on a Sunday or whatever. The other thing is, I will say, like, I have now, there's been multiple things that have happened in the past that have turned out to be true that sounded pretty absurd at the time. And so I really, when I see something like this where there's no gold in Fort Knox, in 2014, 10 years ago, I'd be like, that just sounds like a crackpot theory. I move on with my life. But so many things have happened that I'm like, who knows? I mean, so I have a little more open mindedness towards stuff that might sound conspiracy ish. And so I was only half kidding. I thought, man, there's a half serious chance there isn't the gold there. I know that all the crypto people surrounding Trump might say, well, screw it, let's just go with Bitcoin. So there is a sort of like logic to it, some of that being possible. But on the flip side, um, some people were like, well, if there's no gold there, like they might not say that publicly either. But then again, the way Elon is so transparent, I think they'd have to. I don't know. The whole thing's fascinating. I think if you polled people and asked them, is the gold actually there? Um, I think, I'd probably guess it'd be around 50-50. Now,
Mhm.
does that lead to all those other things? I don't know. But
Mhm.
certainly Bitcoin is, I think, seen as digital gold. And there's something about what this person's talking about that is somewhat smart. But I think you could do it without the gold not being there. I think that's the
Mhm.
part of that sounds a little like tinfoil hattish. But again, like I know that our social security funds are not really there. I mean, they're supposed to, they've already took that money and just put IOUs in there. So I don't know. So we'll
Yeah,
see.
it certainly seems it. What I like about it is it's it could equip Trump with a reason to push this faster and harder is really what the crypto perspective of this is. And you're totally right. Crypto is always going to say, "Oh, this is a guarantee. This is going to happen." That's why we're going to talk about Jack Bogle later in the episode because
Mhm.
everybody listening in, we're not experienced investors with decades of experience behind us. We got some stuff that we need to learn, and maybe our confidence is a bit too much sometimes. You did look into this. So how much gold is there supposed to be in Fort Knox, and when is the
Oh
last
yeah,
time that
this
they
is.
looked?
So I just Googled it because I was just curious, like how much buying you'd have to do with Bitcoin to copy the gold that was in Fort Knox. And I Googled it, and like, how they give you the AI answer at the top? AI said 6 billion. And I was like, that's it? So I basically was like, 6 billion is like a month of ETF flows. It's like, it's no big deal. I wouldn't get too worked up about it. But then people were telling me that the gold hasn't been marked up since like the 70s, and it's actually worth more like 800 billion. That makes more sense to me. That sounds more like a true reserve. I don't understand why it hasn't been marked up, and I don't understand why Google's AI wouldn't be onto that. But it's not like it said it's 6 billion, but if you mark it by today's price of gold, it's this. That's what AI should have said. So just note to self: don't always trust the AI. That's one moral of the story here. But the other is, when you get close to $1 trillion in gold, that's a lot. That blows away how much ETFs hold of gold. Gold ETFs have well, at least in the US, about 130 billion. Um, and the Bitcoin ETFs are about 130 billion. So that would be a monster number if the government were to buy that of either gold or Bitcoin. So that's a whole different story. 6 billion, obviously, I was wrong. So um, I get why now. It kind of makes sense why someone would be thinking that if you wanted to sort of make a new reserve of Bitcoin, you got to talk in these bigger numbers.
All right. Well, Elon, if you're listening, please go count the gold in Fort Knox so we can all know the answer to this question. Okay. One more fun little tweet before we jump into the ETFs. You posted about a Bitcoin maxi said that they have transferred, this is plan B on Twitter, so they've transferred all their Bitcoin into an ETF, which is very, very interesting. And basically, they cited
Mhm.
ease of use in terms of managing the funds, ease of being able to manage it alongside the rest of their portfolio, their stocks, their bonds, etc. And this is a big move. How do you see the future? Are people going to buy more on the I don't want to get into the self-custody debate, but
Yeah,
are people going to buy more on the ETF side or are people going to buy more of their crypto on chain? And especially from the institutional side is where I'm really
yeah.
interested.
Well, there was some great numbers that if if you look at the Bitcoin ETFs in the past year, I think they were 2/3 of all the buyers, and I think Michael Saylor was like 1/3. Everyone else was a net seller combined. Now,
Mhm.
of course, there's some buyers in those net sellers, but it just shows you how powerful the ETFs are in this first year. I premised that they kind of made the price go from maybe 30K to 70. I think Trump optimism helped to go above 70 to like 100. But I think ETFs should be given credit for a good chunk of that move up. Um, and the reason, and I've been to a couple big Bitcoin conferences like Plan B in both Lugano and El Salvador. So I've gone right into the sort of lion's den of crypto as the TradFi suit guy and basically said, listen, you have to respect the ETF a little more. This thing is very disruptable or disrupting. It's not something Wall Street loves. ETFs make no money for Wall Street. They'd rather sell mutual funds and high level hedge funds and all annuities. ETFs are a lean and mean, and that's why they're so popular. They are almost free. You get, the Bitcoin ETFs, 20 basis points. I mean, that's very low fee and they are very liquid. So the liquidity means that when you trade them, there's just really no trading costs. And then there's no commissions on your brokerage account. Like there's free trading of ETFs on the major brokerages. So you're looking at free trading, free exposure almost. And you've got this sort of trusted brands of BlackRock and Fidelity to boot in a very regulated structure. So you have it's a benefit rich vehicle. And some of the understated benefits are just convenience. People love things that are convenient, and also this idea of like, well, peace of mind. Like if you have keys, there's been some people who got robbed recently. There's also been people who lost their keys in the fire in LA, I heard. Obviously, if you outsource it to BlackRock, you maybe go against the ethos of Bitcoin, but you certainly make sure you have access to that Bitcoin later because it's held one-to-one with Coinbase. Every ETF is held one-to-one. They're all physically backed. It would be illegal not to do that. So there's a real security in all that. And now you can just walk around like not worrying about it. Now, on the flip side, if you think like society is going to like crumble and like having actual Bitcoin that you can transfer yourself is going to be valuable in like a Mad Max afterworld, um, and you think the government might confiscate Bitcoin like it did gold, if you're at that level, I would not use the ETF. I think the peace of mind would come from having your own wallet, to be honest with you. So I just think it depends on how far on that Mad Max road you are. And I think the vast majority of people do not think society is going to collapse and it's going to be like a Mad Max afterworld. And so they're like, look, it's a cool invention. I get why it can store value. A lot of smart people are buying it, and I don't want to kick myself later. I'm very happy to outsource it. So they are happy to let BlackRock handle all that. And personally, the reason gold ETF is so popular is the friction of going to buy gold bars, getting a safe, putting them in your house. There's an equal amount of digital friction for a normal person to go do the whole wallet thing. So ETFs, I mean, think about it. You can take an ETF. There's an ETF that just holds the magnificent seven stocks. That's seven stocks, and it's got $1 billion. I mean, that's not that much friction. You could go buy the seven stocks pretty quickly. But so if you eliminate just a little friction, you'll see some buyers. You eliminate a lot of friction, you're in business. And that's what the Bitcoin ETFs have done. And that's why this guy is interesting that said this. And honestly, the 2 million followers is what, I thought his name's even Plan B. And the replies, sometimes I tweet something and like the crypto Twitter people are like, they
Good
give me the
call.
context, like, oh, this is a buffoon. He doesn't know this. And you've missed the backstory. And I'm like, okay, I'll delete it. But I looked at the replies to this guy, and it looked like people were generally like, dude, why would you do that? Like, it seemed like there was a couple people who came into my mentions and were like, this guy isn't the most trustworthy person. But it seemed a little more like cope than real actual problem. And anyway, it just is one of those moments where someone from the community actually prefers the ETF. So anyway, this is all part of my theme of which is basically like ETFs are potent, they're powerful. In my opinion, they're like tokens, but with a lot of extra benefits. And I think Bitcoin is also, but I'm an ETF analyst and I got into ETFs because I saw their potential early on, just like you saw crypto. And they have really fulfilled that. They're, very popular. And it's normally though, the sort of boomer advisor picture you have of the person buying these ETFs, not this guy with the handle Plan B. And so
Mhm.
anything against type is interesting to me. Now, if I saw a boomer advisor go get their own wallet, that would be equally interesting.
Yeah,
You know what
totally.
I mean?
Yeah, yeah, well,
And
completely.
you
Well,
know the crypto crowd would tout that. They'd be like,
yeah,
"Look."
well, and I don't like. I think we could do a whole episode on the centralization versus decentralization argument. I think that
Yeah.
really there is a you nailed it. We see people care about convenience. Really, in the end, convenience matters, and
Yes.
there is the ETF is much more convenient. The thing that stands out to me is so Abu Dhabi's sovereign wealth fund has been
Mhm.
buying Bitcoin, right? And they've been buying it. They've been buying IBIT. They've been buying BlackRock's Bitcoin ETF. So that was very interesting to me because it made me think, okay, when more governments, more sovereign wealth funds, more pension funds, these large institutional funds, when they buy Bitcoin, and obviously here I am being the crypto bro saying when, not if, but will will they buy ETFs? Is that the path for them?
Yeah, so I think for most of these big institutions, the ETF is very convenient. I wrote a book called The Institutional ETF Toolbox about 10 years ago, and I interviewed institutions about why they use ETFs. What they don't do is they don't buy like the Vanguard 500 ETF. Like they don't do that. They can get all that in a separate account. But what they do use ETFs for is liquidity, and they use it to complete portfolios, things they can't like hire a manager for or the too frictiony to do on their own. So the gold ETF is very highly used, GLD, in institutional portfolios because it's regulated. There's no like, a lot of these people who manage other people's money, they're terrified of getting in trouble or like career risk, we call it. So like if you just buy the ETF and it's got BlackRock's brand name or Fidelity, like you don't have to worry about something going wrong. And I think that's why you'll find them use the ETF, and they'll use the US ETFs despite where they are in the world because the ones here are much cheaper than the ones elsewhere and they're more liquid. So we got the liquidity, the institutional level fees already, and we've got the brand names. So that's why the institutions will probably use the ETF over direct Bitcoin. Not all of them, but I think most will. One thing though is they move like aircraft carriers. So imagine an aircraft carrier turning in the water. It's going to take a while. Whereas small RIAs and retail, they move quick. They're like little speedboats. So an institution is going to take a while, but when they do turn, they usually come in a herd-like pattern. So there's been a couple pensions, sovereign wealth funds, and one endowment so far. I would expect those to multiply over the next 10 years and even 5 years. But you just got to be patient. Like SPY and GLD are good examples. They have many of these types of investors in there. So that's why I think that is an important one. Is that institutions have access to anything. They can call BlackRock, and BlackRock will do whatever they want for this institution. They'll roll out the red carpet, and they'll do it for cheap because they have so much money. And so, if they use an ETF, I've studied why do they use it. So in the case of this, they probably use it because it's just easier to complete a portfolio this way. There's no manager to hire. It's not like you're going to hire a hedge fund just to buy Bitcoin and store it for you. And the liquidity is awesome. If they ever want to like do an option on it to like hedge it, or they want to like short it or cut the exposure down a little bit if there's a sell off, all this can happen quickly without them being seen in the market too. IBIT trades 2 billion a day, so to hold like a couple hundred million, you could sell that in one day without moving the market too much. So that's why the institutions are going to use the ETF.
Mhm. You say they move like aircraft carriers. I hope they move better than Delta air flights that are landing
Yeah,
at Pearson Airport this
it's
week.
wild, man.
That
I
was
fly a lot, so
just
it's just like I hate that thought of you're just sitting there and then like tragedy happens. It's just so scary. But
it's
um,
totally yeah. I told my wife I wasn't going to show her the news because I knew her anxiety the next time we fly would
I
just
know.
be
The
through
only
the
thing is
roof.
like if you are a stat person though, what are the odds of that versus
Yeah,
like a car accident? And cars,
totally.
I think the difference is when you drive a car, you're in control. Like I guess in Uber you're out of control, but also an airplane, it's not your control. Something else externally happened
Mhm.
to make a problem. And that's so frightening and nightmarish. Plus, I think at the end of the day, there's something about an airplane that feels like you're pushing what humans should and could do to the extremes. Like a car feels a little more natural to like the human experience. an airplane, sometimes I'm like, I can't believe I just sat in this tube for 13 hours and I arrived in like Vietnam or
Yeah.
Australia, two places I've gone in the past 2 years. It's wild.
It's a miracle. It's a
It
miracle.
is a
It's
miracle.
insane. Yeah. Yeah.
Yeah,
It's why everybody needs to clap on landing, not just because you actually landed, but because it's a freaking miracle. It's incredible.
true.
Okay, let's go to the ETFs. So I'm going to pull up your list here. Can you take us through what's the current list of ETF applications, crypto ETF applications?
Yeah. So XRP has been acknowledged. So this thing is, we basically have to update it almost every day. But basically, if you look at these filings, I think the most notable one is Litecoin. Now, Litecoin is Bitcoin basically, more or less. So it's viewed as a commodity. So this was filed during the Gensler SEC, and anything filed in the Gensler SEC that they saw was a security got the phone call from the staff saying withdraw this. Litecoin didn't get that call. So
Mm.
Litecoin has a head start because it was started in the Gensler era, and it should be no problem with this era because they're more liberal now. So that's good to go. We think that's got a 90% chance to go and be the next one launched. Now, they have till October to make a final decision. Will they use all that time? I don't know. Maybe Hester Peirce and Atkins will make a point of like just getting it out. Why wait? I don't know. But October would be the final date. Then you've got these Solana ones, which just got acknowledged. The fact that the Solana and XRP got acknowledged is maybe the biggest news of all this, because in the past, again, they were like, get the hell out of here. They tried. They always try every like 6 months. They're like, let's just test Gensler. And they all got withdrawn, including during the lame duck session after Trump won and before Gensler, left the building and drove out of there. They got rejected. I mean, not, withdrawn. So the fact that they lasted long enough to be acknowledged by the SEC, opened up for comment, it's not like that's weird. That's normal. But normal is outstanding or positive when it comes to these security type cryptos. And what it does point to, and this is something Scott Johansson said, although you can't, well, never quote me and James on this because we don't want to go that far. But he thought this was a direct sign that they would have to rescind these lawsuits or tamp out all that down, because you can't technically approve it if you see it as a security.
Yeah.
So it's ipso facto. You
Yeah.
can. I'm not going to say that's going to happen. That's a little beyond my depths, but I will say, I mean, that would be the way that would happen. And then Dogecoin wasn't named, but either way, this one is filing the others, and we just think basically if you're going to be positive about Solana and XRP not being securities, you're good with Dogecoin. And then you've got Cardano and has a 19B4, has not been acknowledged yet, probably will. And then we've got HBAR, Polkadot, which have S1s, but not 19B4s. Now, the reason the 19B4 matters is you have to get that approved. So if you only file the S1, it's sort of like not a complete attempt at a filing yet. It's like a half attempt. So those aren't even really on the register. But I think there's also this other situation. I don't want to wonk out too much, but Rec Shares filed
Mm-hmm.
for XRP Solana in a 40 Act vehicle, doing this thing with a Cayman Island subsidiary to get around some rules. They've done this a couple times in ETFs with commodity type ETFs. And to have all you do is invest in the Cayman Island subsidiary, then that invests in it. So it's kind of like a little bit of a maneuver, I'll call it. If that goes through, that would go through in like March or April.
Mm.
And that could front run all these. Is that a true spot ETF? Not really. It's got that an asterisk next to it, and we found that investors tend to love the real deal. They want to buy the ETF that, which in turn goes and buys the underlying and stores it. That we call like a true spot ETF, like GLD or IBIT. So this list here is all ETFs trying to be GLT and IBIT like. The Rex shares it's not like BITO, which was Bitcoin futures, but it's somewhere in the middle. And I think that'll be interesting if that does have like a 3-month lead or head start on the rest. Does that matter? I don't know. Anyway, this is all part of this sort of jockeying that we see. I don't know if you're probably not old enough to remember the movie Cannonball Run with Burt
No,
Reynolds? Yeah,
no.
it's a really fun 80s comedy, and it's basically all these people who have a illegal race. Whoever can get from New York to Los Angeles the fastest wins $1 million. And one team dresses up as priests. It says Sammy Davis Jr. and Dean Martin. Jackie Chan is in it as this sort of Japanese spy hunter car that can, like, fly and stuff. Two ladies kind of like dress, liberally, and this is also when people get pulled over, they can get out of it. And then
Right.
Burt Reynolds' team is in a hospital, like an ambulance. So they're pretend to be doctors. So all these people are like just basically doing whatever they can to evade law enforcement to get to LA the fastest. This is what this reminds me of. It all had the Bitcoin race had the same thing. There's a cannonball run kind of element, which is just trying this, trying that. And the reason is because if you get out to market first and you start to get the lion's share of the assets, it's almost impossible to catch that person, especially once they get liquidity. That's why, people are so interested to get out first, even with these coins that they're like, I don't even know if there's interest, but just in case there is, I want to be the first out. So that's why there was an explosion of filings the week after Gensler left the building and drove away. Now we got, I think, like 55 ish total filings. And that was like 12 before Trump won, something like that.
Mhm. So it's happening fast for sure.
Yes.
And probabilities, just go through your probabilities quickly here. So and I
Yeah.
don't know if these
Litecoin,
you need to update.
90%. Solana XRP, 70, 65%. Dogecoin is now 80 because that did get acknowledged. Oh, I'm
Mm,
sorry. XRP is also 70. So
okay.
XRP is acknowledged 70. You get an extra 5 if you get acknowledged. Doge goes up to 80. So 90, 70, 70, 80. This is pretty much where Polymarket's at. Polymarket's a little more optimistic than us, but
Mm,
we have we've lived through too much shit to go all the way because we thought there was a couple times they didn't approve back in the old days. And this is when Trump 1.0 was in and Clayton was the SEC. He disapproved one. So it is possible to have a Trump SEC chair disapprove. So just know that. That said, this is before Trump got in a relationship with crypto people. And I think it's different now. But you always got to leave a little, it's you'd rather have people be pleasantly surprised than disappointed. It's like when you're predicting the weather and you see a cloud formation, and you just might as well throw a little raindrop in the cloud on the app.
yeah.
That way people go, actually, it was fine out, rather than erring on the optimistic where they're pissed off that, hey, I thought it was not going to rain and it did. F you, weatherman.
Yeah.
So I just think there's an element to leaning a little bit to the cautious. But those are pretty good numbers, I got to say. Those were all like under 10% before Trump was elected.
Mhm. Mhm.
So at least
Yeah.
there's that, except for Litecoin. Litecoin would have made it through regardless, probably.
Yeah. Expectations are certainly
By the
the
way,
thief of
what's your
joy a
thought
lot
on
of the time.
Litecoin? Like the Litecoin people are an interesting breed. They're like aficionados of like Pokemon or something. It's like, and then the Bitcoin maxis come in and just take a crap all over their whole world, and like it's just
Yeah.
the crypto crime is like crazy. But
Yeah,
what's your
Litecoin's a meme coin to me. That's the best way to categorize it. There's no
yeah?
fundamentals to Litecoin. There's no reason to have Litecoin.
But there's like
It's
okay,
a meme
then
coin
why are these people
with a
dedicated
very
to it?
passionate community. Very
What happened?
passionate
Did they buy it
culture-based
back in
community.
the day and they
Yeah, it's
hold
a
it? And
dino
that
coin. It's
yeah,
a dino coin. They bought it back in the
Dino
day.
coin. I like that.
Yeah. Yeah.
Somebody called it a dead chain. It's like
Yeah, yeah.
boomers love dead
Zombie
chains.
chain, dead chain, dino
Zombie chain.
coin.
Okay.
Yeah, those are all
Anyway,
the terms.
interesting.
And it's not the only one. It's the one that's just done very well
So in other words, every time someone
recently.
who's a Litecoin person comes in and says, "Yeah, all right, this is happening," and defends Litecoin, they're not really defending it for any real purpose other than
Fundamental
I bought
reasons.
it back in the day
Yeah,
and I want the number to go up. That's
exactly.
all this is. Okay.
That's all it is. That's all it is. Okay, so here's the question that I think everybody has
Or Litecoin.
is what's the poor Litecoin? Yeah, I don't really feel bad. What's the impact of these ETFs. So everybody knows the impact of the Bitcoin ETF. I mean, you mentioned it early in the show. It's enormous. Ethereum didn't really seem to have an impact, but I actually want to talk about Ethereum quickly with you because I'm curious from your perspective, was the Ethereum ETF a success or a failure? Because I think from everybody in crypto, it was a failure.
Yeah. Uh, again, I'm a hopefully you get this where I stick with this. I got a lot of crap from the Ether people. I pissed them off because I said Ether ETFs coming out after Bitcoin is like Sister Hazel having to follow Nirvana.
Hmm.
If I'm putting it in 90s band, Sister Hazel had like one hit and they have a small niche following. And if they were to play uh like a casino this Saturday, they'd find an audience. It wouldn't be that big. Are they successful? I'd say yeah, but they're not like Nirvana successful, or they're not on the same level as a band. So that's the difference. Coming after Bitcoin, it was just unfortunate. Had they launched first and gotten like $7-8 billion or whatever, it'd be like, wow, that's pretty good. 7-8 billion in your first year is great. It's hard to
Hmm.
do. A billion in your first year is good. I've seen a lot of products just totally die, or just live in oblivion, or they takes them till like year 3 to get going. Arc is totally successful, but they had like that whole brand had less than a billion for like 2 years. So to have that much money, 120 billion in your first year is just ridiculous. It defies all physics. So to follow that, it's just unfortunate for Ether. So I would say Ether is a success on its own. I think relative to Bitcoin, though, and as I said earlier, it is small potatoes. They hate that term, but I'm like, I just think at the end of the day, silver is also kind of small potatoes to gold. And the commodity space is a great parallel. Gold has about three-fourths of all the precious metal assets. Silver has almost all the rest. Platinum and palladium fight for like 2%. That's probably what you're going to see. And then in the
That's where
commodity
I was
space,
going with this. That's where I was
yeah,
going with this
they tried
question.
all kinds of shit. They tried lean hog futures, aluminum, nickel, oil, natural gas. Most of those came and went, but like oil found a little audience, natural gas a little bit, and then every now and then one of these has like a crazy run, like corn or coffee, and it does get some action, but then it dies down. I think this is the same thing you're going to see here. Once you get to some of the more meme-ish coins, um, they might have some little bit of interest, but I just think a lot of people who are going to trade like a Trump meme coin are probably just going to trade it on a crypto exchange because they're just really into all this stuff and they probably know the other 10,000 meme coins that launch every day or whatever. I just think that the type of person who wants ETFs is probably a little more into like the investment merit. That said, every now and then a shiny object comes along, and as long as it's up like a jillion percent, you might get some looks. But at the end of the day, you just need to keep focused on the Bitcoin ETFs. They are the real deal. They are astronomically successful, and I think they will keep being successful. Ether a little less so, and then Ether, Solana, XRP. If one of these gets some kind of utilization in the mainstream world, some kind of an endorsement, it could help. I don't know who would or how, but right now Ether's obviously like the second most popular one. But who knows? Maybe Solana is used in some way that like a normal person is like, wow, like the government or Microsoft or somebody like use this, um, and all of a sudden that coin starts to get a little halo around it, a little glow, and that could change things. But even in that situation, I just don't see much changing Bitcoin's total
Yeah.
dominance. I mean,
Yeah,
do you?
it feels no, it feels like there's an opportunity for a second place finisher here, and we don't know who that second place finisher is yet, right? Is what I'm hearing you say. But at the
Well,
same
one
time,
quick thing. There is the fact that BlackRock and Fidelity, who are trusted by all the boomer advisors, just stopped it too, is interesting. It's kind of like Ether got this
oh, so they
Larry
haven't
Fink.
applied for any of these
No,
others.
no.
Interesting.
So that matters for now. We'll see how
Hmm.
this plays out, but To me, that's pretty big because if you're an advisor, you're like Larry Fink says Bitcoin and Ether are okay, and Larry Fink gives a lot of these people so much air cover to put some client money into it because he is the CEO of the largest asset manager on earth. So his what he puts into product, they're like, well, he's done his research and vetted it, and they don't have Solana or XRP.
But they could quickly
They
if
could,
one of those took off, right?
yeah.
So, uh, so from an investor perspective, what this says to me is that if the the likely price action that you want to see number go up is more likely to happen from the news than it is from the actual these things getting an ETF. These things getting an ETF, although I guess it does sort of depend on how much. The one thing about Ethereum is its market cap is so high. So a few billion from an ETF doesn't make a difference, doesn't move the needle. Litecoin, I can't remember what its market cap is off the top of my head, but it's not anywhere close to Ethereum.
True.
So I guess from a percentage standpoint, it could move it more. But I think the thing that stands out for me is it does feel like more of a it's the news that's going to make a difference on the price action, not the ETF flows themselves. Unless you think for some reason there's going to be big flows in any of these ETFs.
Well, if like a XRP ETF is launched, it just opens up. It's a bridge to a whole nother world, and so it's like more people are going to come into New York City once they built the Brooklyn Bridge. It's just going to help
Mhm.
traffic, but doesn't mean people are going to come in. So I think what the flows are is going to matter. There'll be excitement when the ETF's approved, excitement when it starts to launch. But like if the flows are mild, which happened with Ether, also Ether did launch and go right down. It's better to launch and go up like Bitcoin did.
Mhm.
It kind of really was like it was kind of like it rained on its like launch month because it was like it just was falling. That was bad. So if you don't see any flows in the first couple days or weeks, um, it could be a bummer because you had this excitement. So I do think though over time, just having ETFs tracking a crypto is better than not because it allows for a whole new type of audience to buy it if they are so inclined. But just having that doesn't mean people are going to buy it.
Yeah, yeah. Is there any index ETFs that are
Yeah, I
in
think
application
Hashdex
right
is
now?
they might have just put it out. Hashdex has a Bitcoin like a greatest hits like a you know um I think it has Bitcoin and Ether. I think someone else put a Bitcoin and Ether out. I should know this off the top of my head, but I'm not that excited by these. I don't really get that.
Like
Here's
it feels like the
BTF. The CoinShares already had the Bitcoin and Ether futures ETF, but there will be multiple spot where they merge them together.
Mhm.
But in the precious metal space, as I said earlier, there's an ETF called Glitter, GLTR, and it has gold, silver, platinum, palladium, has 1 billion. So it has 0.7% of the assets. I think people they just want gold. So I wouldn't look for these like index ETFs of all the cryptos together to do that much damage. I think they'll
Okay.
be mildly adopted.
Okay. Um, Before we jump over to Jack Bogle, uh, is there anything coming from the innovation side? Like the one thing that everybody always says about the downside of the ETFs is like you look at Ethereum, you can't stake in the ETF. You look at all the on-chain assets, and there's a lot of benefits to holding on-chain. You can use DeFi, you can do a lot of lending, you can do leverage much easier. Anything coming, like is staking coming to the Ethereum ETF in your mind? Any innovation coming from the ETF side that might make these ETFs more attractive?
Yeah, a couple things. So I think in-kind creation redemptions are probably going to happen. BlackRock's already applied, and Hester Peirce kind of signaled she'd approve that. So that's one. That's that's the equivalent of like adding like some cool fuel injector into your engine. Like most people aren't going to notice; they don't care. But in the plumbing of the car, it's going to help the car a little bit. So that's one. Number two is staking in Ether, which would help the returns. So that's pretty good. Those are, and then what you're going to find is stuff like this. Like there's probably going to be a Bitcoin ETF that comes out and says, we'll actually let you redeem in Bitcoin. Like if you send us money, we'll send you Bitcoin. There's an ETF like this with gold called AAAU and OUNZ. That said, if you do want to receive a gold coin instead of your money, instead of cash, it's like a 2% fee to like send the gold coin to your house, and you got to pay UPS. Most people, by the way, who go into ETFs and use them don't want any part of the underlying back. They want cash back. So I don't think that'll matter much, but you'll probably see that. You're seeing options writing strategies on top of the Bitcoin ETF. You're going to see like obviously leverage products, basically all the kind of stuff that they try. There's like Coke, Diet Coke, Coke Zero, Cherry Coke. It's going to be like all kinds of versions of the Bitcoin ETFs. And a couple will carve out a little audience, but again, it'll all be child's play compared to the sort of real deal spot Bitcoin ETFs. Those would be the innovations to watch. But watch this. There could be something that is tried that I can't even think of. The ETF industry, because all the money comes here. Last year, ETFs took in $1 trillion. This is where all the fish are biting. So if you have an idea for something, you're going to try it here. Therefore, people who have been doing this a long time and are motivated by capitalism are going to probably come up with some interesting ideas. And there could be one or two things that I was like, I never thought of that. Makes sense. Last couple of years, we've had buffer ETFs and equity income ETFs, which I did not think would be a big hit, but they were, and they came out of nowhere. And then single stock leverage ETFs, I didn't think would be so popular. So just look for all kinds of spaghetti to be thrown at the wall and a couple things to stick.
Okay, let's talk about Jack Bogle briefly before we let you go, Eric. So you spent 2 years writing a book about Jack Bogle. I'm going to guess that most of our audience does not know who Jack Bogle is. They all know Warren Buffett, but in your
Yeah.
mind, Jack Bogle deserves as much credit as Warren Buffett does from an investor perspective and the legacy he left. What did he do, and what can our listeners, regular crypto investors, learn from Jack?
Yeah. So nobody's had a bigger impact on the investing industry in the past 50 years, in my opinion. A lot of the flows we see, whether it's to like low cost ETFs or to passive, you pull the string on that and you keep saying, and you go to the source, you end up in 1974 when Jack Bogle set up a company called Vanguard. And the structure he gave it was that it would be mutually owned, like an insurance company. And what that means is that the investors are the owners. So it's like a co op. And so every time Vanguard got money, instead of spending the profits on like, I don't know, advertising on a sports stadium or paying people a bunch of money extra or hiring too many people or renting out, condos in the Bahamas, the people who voted on what to do with the profit were the investors. So they voted, let's get lower fees. And so you wash, rinse, and repeat that for 40 years. And Vanguard's fees on their index funds went from 50 basis points down to 3. And so Bogle essentially made investing free. And this is what he had to do, though, by making a mutually owned company is you make it, he gave up all potential riches for himself. So there is a Satoshi like move here where this person was like, I just want to do this for the good of the world. And then they never cashed in their Bitcoin and you don't know who they are. That was like a charitable act that is real easy to get behind and believe in. And so there's a whole group called Bogleheads who similarly are like, this guy's great. He gave us free investing. And he didn't do it in a gimmicky style. Without Bogle, there probably would have been someone to come along and offer up a zero fee fund or something, but they would have tried to get money out of you some other way. It would have been a loss leader. There is no other there with Vanguard. They actually wanted to make investing cheap. Everyone else has to be cheap to compete with them now. And so they're a special company, and really he's a special guy. Without him and his, unusual DNA and thinking and logic and his life experience, I tried to break it all down as to how somebody could go to Wall Street and purposely give up a fortune. It just is rare. Most people go to Wall Street, want to make a fortune, and that's that. Nothing wrong with that. So he was like an anomaly in physics to me, and I really think there's a lot of things that can be learned here. And one of those things I always thought when Sam Bankman-Fried was doing his thing, and I saw FTX on a goddamn catcher, no, an umpire in baseball. And I'm like, first, because it got Tom Brady. They did this, they did that. And I'm like, baseball? No, but that's not even the target market. I mean, how much money does this guy have? He's advertising, and I never saw an umpire wear a logo. They must have given the Major League Baseball a shitload of money. And I was just like, to me, that was a red flag. And I just thought, Sam Bankman Fraud was out there talking about populism and how Bitcoin is like decentralized and all this. But honestly, he was like as greedy as any Wall Street fat cat I've ever seen. And in the end, he obviously took all the investors' money. But to me, Bogle walked the walk when it came to being a true populist for the people, lowering fees and killing friction and decentralizing and disintermediating. He did it in a way that was he talked the talk and he walked the walk. You rarely see that. Even some of these, like Coinbase took out a Super Bowl ad. I mean, no offense to them, but they make a ton of money and they want to make that the fees in the middle. Bogle just never advertised, didn't do any of that. That's why I took Vanguard. Here's a great stat: 97% of Vanguard's asset came after Bogle left as CEO, and
Wow.
he was CEO for 25 years. So because they didn't advertise and they just like, and it took a while to get down to like real low fees. It took a long time, but they built a huge foundation and a massive amount of trust. So even though everybody's cheap now, people still prefer Vanguard, a lot of them, because of the trust factor. So I just think what this guy did was anybody could learn from in any business. Not everybody is going to be as like Puritan as this guy. He's hard to live up to, but there's certainly things you could pull off of in any industry. And I even had Matt Hogan from Bitwise write the intro and the forward to my
Oh, no
book.
way.
Yeah, because Matt came from the ETF world, and one time he put Bogle up as Obi-Wan Kenobi, and the mutual fund industry was Darth Vader, and so he was real into Bogle. Then he goes to Bitcoin, and he's doing his thing there. And I thought it'd be interesting to get him. And Bogle wasn't a fan of Bitcoin, but it's a different story. He just didn't like. He doesn't like commodities. But I think they had this ethos with Bogle and crypto is similar. And if you read a lot of Bogle's books, half his like there's two or three books alone that just slam greedy CEOs and bankers and the Fed. He has a whole book about 2008 that would read similar to this sort of not all of it, but like the idea that like you should spend all this taxpayer money bailing out these banks. He hated that. So there's a lot of things that are overlap in ethos and spirituality with Bogle and crypto. He just didn't like investments that don't have cash flows. That's all. But anyway, Matt Hogan wrote a great way. He threaded the needle between the crypto Bitcoin younger crowd and Bogle and the mutual funds because I thought, and I cast Bogle as a punk rocker. I was trying to say that this is a book about Bogle, who's a older guy. Mutual funds are boring, but I'm going to show you the punk rockery of this guy. And I did my best in the book to lay all that out.
Yeah, it's a great way to characterize Bogle in that sort of similar idea as Satoshi, against the norm, looking for change. The one thing that you brought up there that really stands out to me from an investor perspective is we've got a bit of an issue, and this isn't a new issue, but we've got an issue in crypto right now that is taking center stage, which is the casino and the gambling and this need for 100x returns or nothing. And what it's leading to is it's leading to a lot of people to feel a lot of pain and to lose and to invest in meme coins like Libra, which happened over the weekend or something like that. And it's scary. And I know Bogle talked a lot about the big long and this, think more like a gardener and less like a gambler.
Yeah.
Can you break that down for us and talk about why that's so important for an investor to build long-term wealth and for an investor to really change the course of their life?
Yeah. I mean, he had great data on it. Like as as bad as active mutual fund managers were, do-it-yourself day traders of stocks were worse. So if you wanted to lose a lot of your money, because he had charts showing that if you buy an index fund and hold it, you get to keep about 98% of all your gains. Use an active mutual fund, you get to keep about like half of your gains. You try to do it yourself trade, you'll end up keeping 10% or something like that. Like the numbers were pretty damning, in no matter how you cut it on day trading. But he was fighting more against stocks. Remember, in the 90s, there was a lot of hoopla around certain tech stocks and pets.com. This is part of human nature. So Bogle was really just he couldn't understand the culture of trading in the 90s, or the 80s, but it's not normal to me. I see meme coins and stock traders and people using Robinhood accounts to trade options is all the same. It's not like me. It's not like it's a crypto thing. It's a young person. I want to have fun and like feel something thing. That's all it is. And you might as well throw in DraftKings and like sports gambling right into that. That's a whole culture of degeneracy. But what we noticed in this book was that a lot of people graduate out of that, especially if you get into a relationship. Your partner's can be like, "What are you doing?" Let's say you have a mortgage. So, but in your youth, it's just I'm not. I don't try to fight it. I'm like, if you want to be a degen and learn how hard it is, go ahead, and then that might make you a better holder later on because there's no use in doing all this crazy trading. There's also a long bull market that we have going on now, and things get craziest like the longer the bull market goes on. So there's like a lot of froth. Like we have one guy on my team. He's like, man, this market needs a hard rain, just to wash away because some of the filings in the ETFs are getting crazier and crazier, like 2x leverage stocks that are like quantum computing stocks that have a volatility of like 300%. Like there's a lot of stuff that's just basically froth from the end of a bull market. A long bear market will wash away a lot of this and people come back to reality and like only hold things that are really matter to them. But I just don't really see I don't really care. There's a phrase also in my book that Jason Zweig brought up, ROE, return on entertainment. An ROE can be enough. Like as long as this person's like has a community they're like toying around with and they're getting entertained. I spent, as I said earlier, I can't judge because I spent a ton of money doing things that were not healthy in my 20s. And I knew they weren't healthy and I couldn't afford them and I did it anyway. And I grew from
And
that.
here you are. You did all right.
I survived, and I just think that's, what's that phrase? The youth is misspent on the young or something like that. That's how I see it. And I think a lot of times the coin that has the big return or whatever gets the more action on Twitter. In the stock space, I have this chart that like stuff that makes up 5% of your portfolio, like the really weird shit, makes up a lot of the media coverage because media loves to cover higher flying stocks. So like some of the media will be fixated on one stock for like a week, like Tesla or something like that. But the reality is most people are holding things that are more meaningful for longer periods of time. But the line I keep coming back to is the line from War Games when the computer plays itself and ends up saying that the only winning move is to not play. And I think a lot of people end up there. You just want to buy and hold and think like an investor. And over time, the numbers get really good. And then you get compounding returns. If you really want to learn about the secret sauce to investing is compounding returns. And the only way for compounding returns to really like have that magic where the numbers start to build in big numbers, you have to be patient. It might not happen until year 12, 13, 15, 17. So compounding returns is what I think most people should be after and what they should teach in schools, not the stock picking competition. And I think this is just the same culture that would pick stocks is now messing with meme coins. But again, nothing new under the sun. This is just what young people do in their, to have fun with their, fun money or whatever.
Mhm.
Hopefully it doesn't get any more deeper than that. I would just, if I was a Bitcoin person and like in legitimate stuff, I would group this with Robinhood accounts, options trading, quantum computing stocks like DraftKings, betting on like who will score the first touchdown. Like there's like such degenerate bets you can make, like who will get the first handoff in the game. I mean, this is pretty out there. So I just think all of that is the same thing.
Yeah,
You
and it's
know,
not going
someone who
away.
buys and holds
It's
Bitcoin
not
is very
that's going
similar
to
to someone who buys and holds the S&P. There is
yes,
a
yes.
hodler mentality that is similar between Vanguard and some of the Bitcoin people for sure.
Yeah, yeah, completely. You bring up a great point. It's we did an episode a few weeks ago with Ryan Watkins. I don't know if you know him. He's a crypto hedge fund manager, and he talked about exactly this is why the best way to capitalize in crypto is to invest long volumes, because there's going to be this degeneracy no matter what, and
Yeah.
all you need to do is capture that value by investing in the tokens that have the trading, that are part of the volume exchange that is happening constantly and is not going to end anytime. Eric, been an absolute pleasure to have you on the show today. Thank you so much for your time and for your expertise in ETF and investing. It's been wonderful to learn from you.
Yeah. Thanks for inviting me on. I'll see you next time.
Thanks for joining in, everybody. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.